back. Let's invite Deven Choksey on the show to talk about some stocks which should be on your radar this morning. Deven, morning. One of the big winners of yesterday were Kumar Infra. The stock was locked in an upper circuit of about 20%. There was a CLSA, note where they've raised the target price on Kumar, and they're saying it's raining urban orders. The urban orders for Kumar Infra have doubled on a year-to-date basis. Is there more upside in the stock, considering it's already up 120% this year?
So good morning, Rima. Well, I think this is a story with most of the infrastructure companies. Be it starting with, I think, a big daddy like Larsen, or for that matter, I think any other mid-tier, small-tier infrastructure companies who are basically winning all the major projects, particularly companies like Kumar, winning major projects in the metros, where the construction work is in full swing on the infrastructure side. I think the order book position will continue to remain on a stronger side. And if I may be at the risk of sounding a little bit more optimistic, I would think that most of the companies would probably have visibility hereafter on the order book side of next 3 to 5 years at any given point of time. Given the size of business, I think that the governments are putting in the hands of most of the contractors, I think the kind of business will be on a higher side. However, I think execution would be the key. Most of these orders would be over a period of time, I think 2 to 3 to 5 years. And that is where probably I think one will have to be mindful about paying the price and the valuation. The fact remains that I think most of these orders would get over a period of time executed. And as a result of which, I think the growth cannot be seen, I think, accelerating on a quarter-over-quarter basis. Maybe I think it would be a gradual growth happening in the subsequent quarter. Safe to assume that I think companies like Kumar could possibly produce on a yearly growth average of around 20% for next 3 to 5 years.
Okay, so that's a positive view on Kumar Infra. Deven, hi, good morning. Season's greetings to you. Just want to get your thoughts in on the PSU space, which has been the market's sort of favorite, darling in 2023. Specifically looking at the oil and gas companies, government-owned companies. I mean, there's oil is something that's on the move. We've got 80 on Brent once again. Now, would you look at any sort of plays here, either upstream on an ONGC or an Oil India, or even downstream for that matter? I mean, downstream stocks, IOC, BPCL, HPCL, they've had a good December, a decent rally on most of these names. How do you view them?
Yes, should be. Good morning and season's greetings to you as well. Well, I believe that I think the overall environment is going to remain steady for most of the oil marketing companies as well as for the exploration companies hereafter. The price range, I think, is likely to remain steady between the $75 to $90 to a barrel. And that is where probably I think most of the game is going to be played as I see it. Whether one is getting immediate advantage out of this particular price regime or whether I think one is going to get the steady price regime, one is not completely sure. Given the kind of election phase that we are entering into in the country, I believe that I think the oil companies, particularly the oil marketing companies, will be finding themselves on a no price revision kind of a trajectory for next 3 to 5 months. In such kind of a period, if at all I think the crude oil prices goes up, then possibly there will be a challenge. And if the government, I think, is basically bringing down the crude oil price and making it steady for next 3 to 5 months, then again, I think it is unpredictable kind of a quarterly results as far as I think these companies are concerned. I'm not a very big fan of buying into the public sector undertakings, oil marketing companies, or even for that matter, exploration companies. I would rather stay with, I think, likes of Reliance, where the business predictability is much better. Exports, I think, is remaining, I think, as their mainstay on the refining side. And at the same time, the realization remains relatively more steadier compared to their peers in the PSUs. So we stay with, I think, the likes of Reliance vis-a-vis the public sector enterprises. Even though they appear relatively, I think, giving some better return at this point of time, but still it is making sense to stay with a player who is basically providing the long-term visibility.
Deven, hi, morning. Just a couple of names. Saturn Credit Care, ICRA has upgraded their long-term rating. I don't know if it's a microfinance company. I don't know if you have any thoughts. And then chemicals, where stocks are starting to show some strength, maybe just a tactical move, just a bounce. We don't know for sure yet. We've not heard anything definitive from any of the chemical companies to say that they've turned the corner. So if you have any thoughts on what's happening there, any stock picks there. So Satin Credit Care and anything in chemicals. Go on.
Yeah, Prashant, good morning. Well, I guess I think the most of the microfinance companies, small finance banks are having relatively better time, and they are taking the market share out of I think the cooperative banks in the regional areas. That's where probably I think the business condition remains relatively more favorable. The cost of money is also I think relatively at ease, though the RBI's regulations are coming into play in between for NBFC companies. However, I believe that I think most of the companies are having relatively stable costs and at the same time, I think better lending opportunities in the microfinance, small finance space. So one could possibly argue for, I think, staying with these companies from an investment perspective. And at the same time, sooner they grow bigger in the size, I think they become the target for some of the private sector, corporate sector banks to be part of them. So that is where one could possibly make money on a steady basis. As far as I think the chemical companies are concerned, I think largely the input cost I think is remaining relatively more comfortable at this point of time, which is assuring the margins for them in subsequent quarters, which was up till now in the last 12 months or 18 months. I think that was not the situation. These companies were most of the specialty chemical companies were I think vulnerable to the high cost of crude oil, as a result of which I think they were unable to pass on the cost. On the other side, the scenario on the demand side has actually been improving. And many of the companies, I think, which are basically into contract manufacturing space, they are relatively having, I think, better visibility on the order book side as well as on the execution side. So I think one could possibly argue that some of the specialty chemical companies would probably remain, I think, better off in the given period. Maybe mid-tier companies like Anupam Rasayan, Amir Organics, or even for that matter, Vishnu Chemical in South. These are some of the companies where probably I think we feel that there is an opportunity from investment perspective.
All right.
Very interesting. Vishnu Chemicals, so name we don't hear too often. We'll look that one up as well. Deven, stay on. We have more questions for you before we start getting our pre-open rates. We still have Deven with us, so let's see if we can toss some more questions to him. Deven, hi. I just want to go back to yesterday's big decliners, and one was Infosys because of this deal cancellation. The second was Bajaj Finance. The question's more on Bajaj Finance, actually, because that stock struggled for the better part of 2023. Now you have this credit card issue with RBL Bank, which is why yesterday we had the sell-off. But what would the approach be? I mean, multiple issues, I mean, NBFC regulations, etc. Would you be a buyer? Would you wait and let things settle down? What's your call?
Well, I guess I think in case of Bajaj Finance, the core lending business is continuing to grow at the rate of 30% and above. And that is giving me more assurance that all the aspects of the business are in place. And the company is, I think, doing very well as far as I think the business lending business is concerned. As far as distribution business is concerned of financial products or the bank products for that matter, I think there may be in between some amount of challenges which probably one is experiencing, but that does not take away the larger part of the picture as far as I think the company is concerned. In fact, I think any correction in the stock price of a sizable amount possibly would mean that I think there will be a buying interest at the lower levels. Largely because of the fact that I think currently the price to book value at which the stock is quoting is possibly leaving, I think, very little headroom for somebody to enter into the stock and make money. Unless I think one sees around 15 to 20% kind of a headroom in the stock, I think one is not going to buy this stock immediately. And that's where probably you are seeing the sideways to downward movements in this particular counter. I believe that any corrective downside in the stock price would make the case for investment in this company. Fundamentals remaining absolutely very strong and convincing. And I think that's where probably I think one would like to keep an eye on. Maybe I think such kind of stocks there probably the market has already priced them in a given situation. One will definitely have to wait for the price to lower down before getting into it because other fundamental aspects remain strong and convincing.
Deven, you want to, as we look at it to 24, any stock ideas, picks from your side?
Prashant, I think generally believing that the consumption theme will continue and it will accelerate. On the industrial consumption side, largely the infrastructure and the industry's expansion would mean that the ancillary businesses within that I think would possibly continue to have a larger amount of business in the order book. One among them could be the railways, second would be the defense. I think that theme will continue. However, some of the companies which are expensive, I think they may probably find themselves on the sidelines. We will have to look around for newer ideas, newer listing of the newer companies in the same period. Similarly, I think auto ancillary looks, I think, pretty interesting along with the auto OEMs. The likes of Tata Motors and within the ancillary units who are catering to the companies like Tata Motors, Ashok Leyland, they would remain probably, I think, one of the better of the lot in the entire theme. Within the IT space, we believe that engineering and R&D space gives reasonably high amount of visibility, though some of the companies are expensively quoted. Maybe corrective downside in stocks, I think, would mean that there is an opportunity to buy into these companies. So selectively, one will have to play the theme in 24 in coming year.
Okay, all right, Deven, we'll leave it there. Thank you very much for joining us and running us through all of those. So lots of themes, but I mean, as we've heard from many, a lot more selective, and it's not. Themes generally have done very well. So within themes now, the market is doing exactly that, trying to pick where price performance has not been great, or there's some amount of relative underperformance, etc., and trying to correct that. We'll take a quick commercial break here. We'll come back. I think the pre-open should be with us. We'll also have